All right, welcome back, and good Monday morning. The congestion at the ports, both here and in China, have brought the holiday supply chain to a slow grind. In a special CNBC trade tracking investigation, we scoured the bills of American importers, looking for holiday items arriving on our shores, and maybe those that won't get here till next year for this Christmas. CNBC's Lorianne LaRocco is here now with more on her findings. All right, Lorianne, welcome. I know you're digging into all this stuff. You literally wrote a book on it. We appreciate it. Are things really getting better at the West Coast ports and or the overall supply chain?
Well, good morning, Brian. The answer is not really, despite what we're hearing. According to the bills of lading where I used Import Genius, holiday Christmas items, you're looking at almost 730,000 packages that arrived since Thanksgiving. And unless you have expedited pickup, C.H. Robinson, U.S. UPS, Amazon, they are all saying that, you've got to get these products in. And the dwell time at these ports is it's just too much. It's taking too long. C.H. Robinson tells me that they are sorting these items outside of the containers. They're pulling these containers off and they're literally sorting them out to get these time-sensitive items. And you're looking at 6.5 days for one of these containers to leave the port of Los Angeles, Brian, and that does not count the transit time from the rails and the trains.
Yeah, and again, there's a lot of talk about how many ships are off the coast of Long Beach and LA, and we have heard from some people that, it's getting better, maybe even on this network. But actually, you and I go back and forth over the weekend, and I posted some screenshots from marine traffic. It looks like the ships, there's just as many ships. They just moved them off the Mexican coast, kind of hiding them out to sea, correct?
Correct. They have this new queuing system, and the reason why it was created because of these hundreds of vessels that we have seen right off the ports of LA. It's destined for the congestion and also air quality. But the reality is we are only hearing the ones that are at anchor, and that really provides a false narrative of what's going on. You have a total of 95 vessels right now, Brian, off of the coast of Los Angeles and Long Beach. That's according to Vessels Value, which tracks the vessels, as well as the Marine Exchange, which is in charge of all of this. So it really is a false negative.
Yeah, and I love this point because these vessels that we showed, and they're in this weird sort of point like off of Ensenada, Mexico, and I was clicking on them. They all came from China. They're all going to LA or Long Beach, and so they're going hundreds of miles out of their way, by the way. They can't anchor. The water's too deep. So to your point, Lorianne, we can say the number of vessels, quote, at anchor have come down, but the number of ships is the exact same.
Well, exactly. And so when you look at the data, right, that we're getting. So the ports of Los Angeles put out on Friday that they have 12 vessels at anchor. That's great, but that's because of the new queuing system. When you pull out the amount of vessels that are waiting from the port of Los Angeles, you are looking at 43 vessels that are outside of there. So people really need to know the reality because a lot of mainstream media are only giving that anchored number, and that's not the absolute truth.
Well, and, and not knocking anybody, but this is what CNBC does well. We're a data-driven organization. You actually look at, the science, as we've been saying so much lately. You're leaking into the science of shipping, which we love. How long, though, Lorianne, in your crystal ball, talking to your people, is this going to last? Are we talking this time next year? We're going to be having the same conversation?
We are. And it's not really what folks want to hear. There are so many headwinds still there. You still have outbreaks of COVID in China. You have, from what I've been told from both logistics experts as well as the importers, they tell me at least until the third quarter of 2022, we are going to see these supply chains disruptions because of the immense congestion.
And what kinds of things? I mean, listen, what is it, December 13th? If you haven't finished your Christmas shopping, it's probably going to get a little tight. I mean, some of these must-have items, bottom line, are they going to be on the shelf for the next week or two for all the procrastinators out there?
Well, a lot of the big retailers we've seen have the control of their supply chain. So they've been able to get the charters, right, that enable them to get their product in. It's the small businesses and the medium-sized businesses where I saw within these bills of lading that are being impacted. But that notwithstanding, you still have items like BJ's. They have products still left in these containers. Walmart. They have
Yeah.
dog and cat stockings. These are items that you can't sell, post December 31st. So they have to either be put in warehousing if you have it or sold on the secondary market at a loss.
Come on. I always wait to December 26th to get my dog and cat stockings for the next year. Very quickly, though, Lorianne, I know we got to let you go, but very quickly, we're going to get viewers who push back and say, well, the CEOs of Walmart and others said things are getting a little better. That's true. For Walmart, we're not accusing Walmart of lying. Walmart can hire its own ships, right? To compare Walmart to everybody else is nonsense.
It really is, because the whole thing is the dwell time of these containers. So you're looking at, that means how long is a container sitting at the port? So you've got 6.5 days at the port of LA, almost 6 days in the port of Long Beach, 4 days over on the East Coast. And what makes Walmart the powerhouse that it is, that it controls its supply chain. They have the distribution centers. They have the trucks. They can pay the expedited shipping. A lot of the small and medium-sized businesses, they can't do that in their contract. So they're waiting at least, what is it, 2-3 months to get a product.
Well, we really appreciate that deep dive, Lorianne. Again, it comes down to, science and data, and you're actually looking at the, numbers, not just opinion. Lorianne LaRocco, thank you very much.
Thanks.
All right, why don't we step out and get a check on some of this morning's other headlines outside of the world of money and business. NBC's Philip Menn is in New York with that and more. Philip, good morning.
Hi, Brian. Good morning. The House January 6th committee has released a report that recommends holding former Trump chief of staff Mark Meadows in contempt of Congress after refusing to testify about documents he provided to the panel. According to the report, they would have questioned him about a January 5th email where he indicated the National Guard would be present on January 6th to, quote, protect pro-Trump people. It also states the committee would have asked Meadows about text messages regarding efforts to encourage Republican legislators to send alternate electors to Congress. An attorney for Meadows has not yet responded to requests for comment. California is taking a page from the Texas playbook. Governor Gavin Newsom says he'll use the tactics from the recent Texas abortion law to restrict access to assault weapons. The proposed bill would allow private citizens to sue anyone who makes or distributes an assault weapon in California. The Supreme Court recently allowed a Texas law which allows lawsuits against abortion providers to stay in effect while a court battle continues. And finally, a spoiler alert for Sex and the City fans. Peloton is backpedaling, and they're turning the clock back on a shocking death in the new revival.
Should we take another ride? Life's too short not to.
And just like that, the world was reminded that regular cycling stimulates and improves your heart, lungs, and circulation, reducing your risk of cardiovascular diseases. Cycling strengthens your heart muscles, lowers resting pulse, and reduces blood fat levels. He's alive.
That's Ryan Reynolds helping bring Mr. Big back from the dead in a new commercial. The fitness company's shares took a hit after Chris Knott's character suffered a heart attack on one of their bikes in the new revival. So, Brian, I hope that anybody who cares about this, this is not the first that you're hearing about what happened.
Okay, because I'm not going to lie. Never seen the show. I was completely confused by what was going on until just now. So he died on a Peloton in the show. But Chris Knopf is actually alive and well.
That's from what I understand. I watched the first 20 minutes and then the halftime was over and I was watching and I went back to it. So I actually did not see him die on that Peloton either. But that is is the subtext there.
Okay. Okay. Yeah, maybe some people can help us. The storyline, he died on a Peloton, but it was a fictional program and everything is just fine. Philip Mena, thank you. The Knopf gate is now over.
That's right.
Philip, take care.
All right.
All right, straight ahead. From the field to the final frontier, a few new inductions into the celebrity space tourism business booked over the weekend. We'll call this one Big Blue meets Blue Origin. We'll be right back. The market rally picking up where it left off on Friday. Futures pointing to more gains, and your morning RBI will highlight why we could break one of the most impressive stock market records of all time. The federal government and several major tech firms racing to try to contain the fallout over a major software flaw with hackers in their own race to exploit a major bug. And some new positive signs in the fight against Omicron. Dr. Debbie is here, standing by with what it could mean, the fight to combat the spread of the latest new strain. It is Monday, December 13th. And this is Worldwide Exchange. Well, good Monday morning and welcome back. Maybe you're on a Peloton, by the way, and if you are, start to pedal a little bit faster, grab another water, a cup of coffee, and we got 30 minutes left in this fine program, and it's looking like we could have a fairly fine start to your week. Nothing big. Futures, they've come off their highs, but they're still up 2 to 0.3%. So right now it's early. Some green on the screen. Keep this sort of Santa Claus or market rally going. The SP 500 last week posting its best week since February. We're also keeping an eye on shares of Apple, probably the most important stock in the world, not just for us, but for the globe. Apple getting this close to a $3 trillion market cap. If you're counting at home, the stock has to hit $182.86 per share to hit that number. Oddly specific, I know, but that's your number. Right now, we are seeing Apple trading at $181.10, so a couple bucks to go, but Apple's been on fire lately. It's up 35% year to date, but 20% of that has come in the last month alone. So if Apple just gains about another $5.50, it will be the world's first $3 trillion company. Wow. All right, now let's get more of your morning's top headlines, including several technology companies racing to contain what they have found as a serious security flaw. Savannah's back with that and more. What's going on, Savannah?
Brian, yeah, so the Department of Homeland Security is urging government and private sector organizations to address what's being called a critical flaw in widely used software. The vulnerability is in a Java-based software known as Log4j that organizations use to configure their applications and could give hackers sweeping access to networks. Researchers have found hackers started exploiting the flaw Friday to gain access to servers running Microsoft's Minecraft game. Amazon, Twitter, and Cisco are among the companies that have said they were carrying out investigations into the depth of the problem. And software providers that include Log4j in their products, such as IBM, Oracle, and VMware, have said they are deploying patches. Alibaba firing the female employee who accused a former supervisor of sexual assault. The worker's lawyer revealed she was sent a note informing her that she was being let go late last month, accusing her of spreading false information and damaging the company. The woman went public with her allegations over the summer because she said Alibaba had failed to take action. Alibaba fired the supervisor, but a criminal case was dropped. And Jeff Bezos is Blue Origin carrying out another successful launch of one of its rockets over the weekend. The mission marked the first time the company launched 6 passengers at once, including former NFL player and TV host Michael Strahan. This trip brings the number of people launched by Blue Origin this year to 14 amid the wave of private spaceflight activity. Brian?
Very cool. Congrats to the team and congrats to Michael Strahan. The guy just continues to amaze. I've gotten to know him a little bit, and he's become the king of all media, now the king of space flight.
Exactly.
Savannah, thank you very much.
Sure thing.
All right, take care. All right, now to the latest of the continued fight against COVID. And there is some good news amid all the scary headlines. Brand new research out of Israel is finding that a 3-course shot of the Pfizer vaccine provides significant protection against the new Omicron strain. Now, that data supports the findings presented by Pfizer itself last week. But here's what's important. That Israel study was done using the actual virus, not just a model or what they call a pseudo-virus, sort of in a study like many others have done. Now, that said, we still have a long way to go. Like this time last year, hospitalizations in colder parts of the country are now on the rise, with Indiana, New Hampshire, and Maine deploying the National Guard to assist hospital workers. New York reimposing an indoor mask mandate, and the UK also hiking its coronavirus threat level due to the new variant. Joining us now is Dr. Devi Nampiaparampil, associate professor at NYU School of Medicine, a frontline worker herself as well. Dr. Debbie, good to have you back on. We've all got friends that work in hospitals. I know some frontline workers myself, and I'm just going to tell you, they're cooked. They're just exhausted. It's been a year and a half. Some of them have had now more than one day off in almost 2 years. And you get the feeling that a lot of these folks who are amazing, but they're not superhuman, are at the breaking point. Is there something we can do to help these people continue to help us?
I don't know if it's something specific. I mean, we can take precautions. We talk about COVID a lot, which of course we could take the precautions in terms of protecting ourselves, trying to do whatever we can in terms of the vaccine and the masks and the other precautions. But there's actually a lot involved. I mean, if I think about what's overwhelming the healthcare system, we talk about Omicron and COVID, but there are also issues in terms of healthcare worker fatigue. For example, a lot of the shortages are related to people going on leave now because they have been working for 2 years. So the number of staffing is less, right? So we need some of the folks to come back as well, return to the hospital. And I think that has to do a little bit more with management as well, rather than the people out in the community. Second, we have issues where a lot of the folks, we think about the healthcare workers themselves, like doctors and nurses, but there are a lot of folks that are support staff for the hospital. So let's say the folks in dietary, people who are cleaning the rooms, housekeeping, right? People who are doing the laundry. So anybody that supports the healthcare system also, we have shortages of those folks in general as well. So I think that there are a lot of folks that support the healthcare system that we need as well. And all of that is reducing the number of beds available. Some of these strategies that are done, like to reduce the elective procedures and things within hospitals, I think that may be harming things because we also have patients that need healthcare. As of the past 2 years, the patients themselves have been waiting too to get procedures done. So on top of COVID, we have a sicker population that may also be vulnerable to the virus itself.
And this, okay, and by the way, a lot of healthcare workers, I'm not advocating for or against them. It's not my role, but the vaccine mandates have, we know, factually pushed out thousands of healthcare workers across the country. But I want to focus on something else. And it's a bit controversial, Dr. Debbie, but I know you can handle it because this is the world you live in now, which is, there was an article in The Atlantic about a month ago saying about 45% of hospitalizations for COVID should not be hospitalizations. They're either things that are like a broken ankle and then you find out you have COVID, or there's a lot of people who are so afraid of it. And I've talked to ER doctors about this, where they're coming in effectively having anxiety attacks because they have a fever and they assume they're going to immediately die of COVID. I'm not joking. And they say a lot of these people are basically working themselves up into a frenzy even while fully vaccinated. From your perch, are we seeing non-necessary hospitalizations maybe crowding out those that are necessary for people with, like, in a car accident?
So the people that need to be hospitalized often do end up in the hospital either way. But you're right that sometimes people will come to the ER and divert some of the resources that occurs. But I think it's still better for someone who is concerned to come into the hospital and get assessed there. So that does happen. But I think you've hit on a larger issue that we have a problem where the hospitalizations and deaths, you know, it's confusing about whether these are true COVID hospitalizations or true deaths. Because, for example, as someone who has filled out death certificates, there's usually not just one cause of death. There's a primary cause of death, and then there are several others. So a person, for example, who has COVID or some other virus, it's not always the only thing that killed them. They may have heart disease, they may have cancer, they may have several things that put them in the hospital. And maybe COVID is another factor that affected them and pushed them over the edge, and then this person passed away. So what's happened that we've seen, even, I think this is what leads to a lot of the mixed messaging and confusion as well, is that when this pandemic started, we saw people who had no other risk factors necessarily. Sometimes they caught COVID and then they passed away. So that's why people were so terrified. But now we see people where, as you mentioned, they may have had a sprained ankle. They otherwise look pretty healthy, you know, and then they get diagnosed with COVID and it goes down as a COVID hospitalization. Or you see somebody who had multiple other problems and it gets labeled as COVID. So we need some clarification about whether COVID is truly the thing that caused them to get pushed over the edge or whether it's an antecedent factor.
And it's so important because it drives policy. It keeps kids potentially out of school. It keeps people home. There's so much to it. Dr. Debbie Nampiaparampil, really appreciate your blunt honesty. And by the way, God bless you and everybody else out there that continues to do this work nearly 2 years in. Dr. Debbie, thank you. Have a great day. All right, important points there. All right, coming up, your morning RBI and the impressive feat the markets could pull off this year. Plus, Investopedia's Caleb Silver is back on what part of this market his readers say may be very bubblicious. Futures are up nearly 100. We're back right after this. All right, welcome back. And I am back. And so is the RBI, the most random but interesting thing you may hear all day, CNBC style, of course. And today it's all about records. Again, CNBC style, because these are stock market records. And one of the most impressive market records of all time, maybe the most, could be broken this year. And that is the string of all-time record high closes for the S&P 500 in a year. Look at this cool stat, courtesy of Charlie Bolello and the Compound Capital team. The most record high closes in 1 year was 77. That mark was set back in 1995. That, by the way, was the year after the Federal Reserve raised interest rates by a whopping 2.5%. And the market still rose, maybe a less than there. Anyway, right now we are at 67 record closes this year, 2 more than we had back in 1945, 5 more than 4 years ago, and a lot more than the 5th place tie from 1942 and 2014. So, can we break that all-time record? It won't be easy, but it still is technically possible. Including today, we have 14 trading days left in the year. And of course, we need 10 to tie it, 11 to break it. So we basically need a new record high, not every day, but close. Right now, based on the futures, we are on our way. Futures, they are higher. Anything can happen. But hey, we're on our way. This is something really random but interesting to watch heading into the end of the year. And I'm thinking maybe we need to make some giant, big old CNBC wall calendar counting down to see if we can break that record. Am I right? Let's do it. 14 days left, 10 to go, new record. It's possible. Random, but interesting. All right, so with all these new records comes a lot of confidence, right? All you out there, you buy stocks, they go up, you're a genius. And with that, investors are getting more confident. That's according to the latest survey from Investopedia. For more, let's bring in our friend Caleb Silver, editor-in-chief of it. Okay, Caleb, there is a fine line between confidence and cocky. Are investors starting to cross that line?
Great to be with you, Brian. And I think investors are shaken but not stirred by the recent volatility and leaning back into risk, according to our recent survey. As you know, we've been surveying our readers since pre-pandemic, and now they are about as bullish as they've been all year. We got about 23% adding more money into their portfolios in the past few weeks, even after that dip. You mentioned the record flows in ETFs. That's part of it. 36%, Brian, making more frequent adjustments. 17% choosing riskier investments and leaning into crypto. A full third of our readers we surveyed now own crypto, Brian, Bitcoin or Ethereum. They may have feared missing out. They want to buy some now that we're a little bit lower. They are leading back into risk big time.
Yes, but according to your own, I'm going to quote Investopedia to Caleb Silver of Investopedia. 60% believe at least one asset class is in a bubble, and more than anything, well, residential real estate was second. I'm shocked by that. Is Bitcoin. So what you're saying is your readers are saying it's probably in a bubble, but we don't care because they're just going to ride the bubble until it pops.
Yeah, bubbles everywhere, but not afraid to swim in it. And that's kind of the way they've been almost all year. There have been times when they've backed way off of risk. There have been times they've backed way off the stock market. Right now, they want to lean into it as we head into the end of the year. And you're right, 60% saying Bitcoin is the biggest bubble out there. A lot of them fearing that the market itself is overvalued in the stock market. So even despite those anxieties, despite those concerns, they keep buying.
And we got to go, but the inflation, the biggest risk, according to your viewers and readers?
Absolutely. Inflation, the biggest risk on their minds. They fear that going into 2022. They also fear, higher interest rates and supply chain issues. But inflation is the number one concern. Makes perfect sense, but they're still leaning into stocks and into Bitcoin.
Real world data. They are not afraid of what they even consider to be a bubble. They're leaning in. Ride it till it's over. Caleb Silver, we appreciate it. Really fascinating stuff, Caleb. We'll get you back on soon. Thank you. All right, on deck, much more on those deadly tornadoes, leaving entire communities reduced to rubble. We're going to take you back live on the ground with Jay Gray in Kentucky next. All right, welcome back. And now back to one of our top stories, really the country's top stories this morning. It's families and business owners in 6 states, from Mississippi and Kentucky, even up to Illinois, combing through the rubble this morning after a series of deadly tornadoes tore through the region on Friday and Saturday mornings. the storms, leaving at least 80 people dead, dealing countless dollars in damages. One community, Mayfield, Kentucky, right in the path of the storm, getting hit especially hard, and that is where we find NBC's Jay Gray. Jay, again, we saw in the first time you were on earlier in the show, just absolutely gutting scenes there. How widespread are you seeing the damage?
Yeah, Brian, we're seeing areas like this that stretch for miles here. I mean, blocks and blocks of homes that have been destroyed, businesses that are crumbled, just brick and mortar there, and so many lives that have been affected. This is a firsthand look at some of the devastation here. A tree that's been uprooted here, another one snapped by the winds. There's a house back there. I don't know if you can see it, but it was thrown on this house. A lot of the roof from that house right here underneath the tree. And this truck, as we showed you earlier, is really picked up and pushed into what was the backyard. Now it's just filled with twisted metal and splintered wood, glass that's broken here. And again, this goes on and on for as far as you can see. Just houses like this, people, families that were living in areas like this, now struggling to find what they can, pull what they can from this debris, and figure out how they're going to move forward. That's going to be a very difficult task as the cleanup and recovery does continue here, a process that, Brian, is going to take some time, several days before they can find all those that are still missing across the strike zone. And unfortunately, the numbers you talked about coming into all of this, officials are fearing that we could see as many as 100 or more that lost their lives as a result of this just terrible streak of storms that whipped through the entire Midwest and Southeast.
Saw so many reports and read so much, people still missing, trying to find family members, friends, colleagues, just awful. Gonna need a lot of help where you are and other places. Jay, are you seeing National Guard? Are you seeing people coming in to help from the outside?
Yeah, National Guard is on the ground here and in other areas, and we are seeing people from around the country pouring in to try and help. In fact, the governor of Kentucky last night saying that one of the issues they're dealing with as they try to press forward is they have so many people volunteering to help, volunteering services and manpower, that they've got to figure out how to coordinate that and get them in the spots they are most needed. A good problem to have, he said, in relation to the real problem that they're dealing with here. It's great that they're here right now. Here's the thing. Long term, and you know this, Brian, as well as anybody, they're going to be needed here 6 months from now, a year from now, when our lights are turned off, our cameras are gone, and they're still trying to piece together everything here. So this is help that they're going to need for quite some time.
Jay Gray on the ground in Mayfield, Kentucky, with some just very, very gutting scenes to see. But Jay, we're glad that you are there reporting on it. Be well. Thank you very much. All right, tough transition there, but let us get back down to stocks and the markets. We are seeing futures. They are higher right now. Let's talk more about where that money may be going forward with Greg Branch of Veritas Financial Group and, of course, a CNBC contributor. Greg, it's good to have you back on. Good Monday morning as well. Apple, a couple bucks away from a $3 trillion company. JP Morgan, by the way, this morning raising their price target to a street high, 210. You've talked to us about certain, not just Apple, big cap tech stocks on this network before. Are you still a buyer and believer in some of these big boys?
Quite frankly, it's one of the few places I feel comfortable putting money, Brian. We're going to see a triumvirate of headwinds over the next couple of weeks. We're going to see aggressive Fed action. We're going to see Omicron rear its head more meaningfully again, as we saw out of Europe with Boris Johnson saying that it is more immune elusive and more transmissible than Delta, and he expects it to be the dominant form there. With the UK reporting 50,000 cases, Germany and France, I think that's something we should take note of. And lastly, we're going to see inflation numbers 100 to 200 basis points higher than we already see them. So in that environment, I want tech that is profitable, that has strong cash flows, that has sustainable demand, and has shown us that throughout all of the environments that we're going to see over the next 6 to 12 months.
We have a Fed meeting on Wednesday, and finally the Fed is in play. I mean, they're probably behind the curve already. The bond market's saying that, not me. And whether we get 1, 2, 3, whatever Fed rate hikes, what I know is throughout history, Greg, I've been doing this 26 years now, sadly, is that when rates go up, banks tend to do well. We haven't seen them perform that great. Are you a believer in the banks and financials?
Absolutely. And just like with tech, I'd focus in on a certain type of bank. Surely the interest rate hikes will lift the net interest margin, which will lift all tides to some degree. But until we get there, we've seen that those with powerful investment banking houses, powerful trading floors, powerful capital markets, powerful advisory fees have used those businesses to power performance while we wait for that net interest margin environment to improve. We'll certainly see credit normalize to some degree, but it's certainly a sector that I like into next year.
Certain big tech and certain big banks, maybe the theme of 2021 and rolling right on over, because we all know, Greg, next year is really just the flip of a calendar. Greg Branch of Veritas Financial. Greg, be well. Thanks for getting up early. We do appreciate it. And folks, just to reiterate that, JP Morgan Chase just out, $210 target slapped onto Apple. That is a street high and would make that stock well over a $3 trillion market cap if we hit it. By the way, if we hit it. Anyway, probably talk more about that tomorrow. We've got 23 hours to plan. Thanks for watching us here at Worldwide Exchange. We'll see you on Tuesday. Squawk and the gang picking up all the coverage next.
Good morning. Stock gains set to continue after the S&P 500 logged its best week since February. We'll show you what's moving this morning. The federal government and several major tech companies racing to try to contain the fallout over a major software flaw as hackers try to exploit that vulnerability. And positive data out of Israel in the fight against the Omicron variant. It's Monday, December 13th, 2021. Squawk Box begins right now.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin, and we're going to start this morning with the markets after the S&P logged its best week since February. It was up by 3.8% last week, and it closed at a new record. But if you were looking at it, it was really the Dow that was the better performer. It was up 4% for the week. NASDAQ was up by 3.6%. The Dow and the NASDAQ aren't at new records, but they're not far from it. The Dow is only about 1.6% from an all-time high. NASDAQ is 3.5%. And as Joe mentioned, if you look at things this morning, we are looking at green arrows once again. Right now, Dow futures indicated up by about 90 points. S&P futures up by 15. The NASDAQ up by just over 60 points. And the Treasury market right now, those yields have been under pressure for a while. This morning, the 10-year is still yielding below 1.5% at 1.473%. And then you have oil prices. Crude oil prices skyrocketed last week, up by about 8% after being put under pressure by concerns with the COVID variant. But it had its best week since August, and it snapped a 6-week losing streak. Andrew?
Thanks, Becky. Let's talk about this terrible situation over the weekend. An update now on the severe tornadoes that ripped across several states on Friday. The death toll in Kentucky still unclear as rescuers combing through the wreckage. The governor there initially estimated between 70 and 100 fatalities, but said yesterday that he's hopeful there may be fewer than feared. At least 12 others were killed by the storms in Arkansas, Illinois, and Tennessee. Thousands of homes and businesses were flattened. In Illinois, 6 people were killed when part of an Amazon warehouse collapsed, winds knocking down walls that were 11 inches thick and 40 feet tall. This believed to be an image of the tornado that traveled 227 miles from Arkansas to Kentucky over just a 3-hour period.
That is in contrast to some positive news that we're seeing out of Israel regarding Omicron, the fight against COVID. New research found that a 3-course shot of the Pfizer vaccine provides significant protection against the new strain. The data supports the findings presented by Pfizer last week. It's kind of test tube findings. It all indicates hopefully some positive things. The Israel study is the first using actual samples of the Omicron variant. Other studies have used a pseudovirus constructed to mimic the strain's mutations.
And then there is this, the big buzz over the weekend. I don't know if you guys saw it. I mean, it seems like everybody saw it, coming with a spoiler alert in advance for those who have not been watching and have not seen the premiere of HBO's Sex and the City revival titled And Just Like That. So if you haven't seen it and you want to, you can close your ears, but it's going to be hard to avoid this news. In the show, a major character suffered a fatal heart attack shortly after taking an exercise class on a stationary bike, led by an instructor who was played by, yes, an actual Peloton instructor. Since that show premiered last Thursday, Peloton stock has dropped 15%. It closed at a 52-week low on Friday. A member of Peloton's health council tried to halt the PR crisis with a statement that the character's extravagant lifestyle, which included cocktails, cigars, and big steaks, was to blame for the heart attack. But then yesterday, actor Ryan Reynolds helped the company out with an ad that he wrote, narrated, and directed, reuniting the actor who played Mr. Big with a fitness instructor. Take a look.
Should we take another ride? Life's too short not to.
And just like that, the world was reminded that regular cycling stimulates and improves your heart, lungs, and circulation, reducing your risk of cardiovascular diseases. Cycling strengthens your heart muscles, lowers resting pulse, and reduces blood fat levels. He's alive.
He is alive. He is alive. Ryan Reynolds jumped into a Peloton PR crisis 2 years ago, you may remember, after an internet users made fun of a Peloton ad for portraying a wife who looked terrified. He quickly cast that same actress for a commercial for his aviation gin brand, guys. And so he's now done it twice. And I don't know what the count is at this point on Twitter and Instagram and all the different social media sites that they released that ad to at this point. But I imagine it's worth it. We're talking about it.
Why Ryan Reynolds? Does he own this, or did he just see a strike of like creative genius and realize this is the time to jump in?
So he's become an entrepreneur beyond his acting business, and he has lots of things he's doing. He's making ads, doing all sorts of things for all sorts of folks. Has a mobile phone business. I mean, it's just he's a creative guy.
Smart.
Very
there was
clever.
I was reading last week about how Peloton said, okay, you can, for product placement with the HBO series, and said, yeah, you guys can use it for Sex and the City. Even provided their fitness instructor, a real fitness instructor, but they didn't know the outcome, didn't know how it was going to be used, or that he was going to die, as the secrecy around it. So you can imagine them being like, yeah, we got this great product placement, and then all of a sudden finding out, oh my gosh, it killed somebody off.
So there was the spoiler. So we know who it was now. It was Mr. Big. I didn't think you were going to go into that.
None of it makes sense if you don't know that.
But you got to look at who the actor is, and you can see him there.
I didn't know what was going on. I saw that.
I don't watch the series, but I read it all.
Yeah.
The other question I have though is HBO upset with the actor who's now obviously taking advantage of this? I'm sure there's.
What? They killed him off.
I assume Peloton.
You
had
lose
to
all
back
rights
up the
once you
truck
kill
for
somebody
everybody.
off.
This is the question.
Forgot
Very
all
interesting.
about that commercial, which was very highly produced and slick, and I forgot about that. That's how shows you how short the half-life of that thing was. Man, that came out. People said this is just. They had no idea. They know Madison Avenue can really screw up once in a while. It was a gift. It was like, I think the husband was saying, get on this thing, babe. You know, you need this. And she, yeah, exactly. Right. Get on this thing. You're letting yourself go. I think that was the whole point. And she's like, am I going to be able to satisfy his image of what I should be like? I mean, it was totally tone deaf, but it was, I forgot all about that. So that's been 2 years now. Has it really? Wow.
Lots happened in the last 2 years. I can understand not remembering this.
And Peloton they didn't need that. And we forgot about it quickly, obviously, with everybody doing the in-home training. I don't want to digress, but I'm doing much better. I just want to let you guys know. I'm feeling that my body fat's down like 4%. I'm running. That immediately
Peloton?
takes off the side. No, I'm running on a walkway. What's it called? A walkway, Andrew?
A woodway. A woodway.
Running on a woodway. My knees are a little... You know what? I don't want to digress because I don't want to hear about it. But I'm just telling you, I'm doing a little bit better.
Looking good.
Weight-wise.